Hello and welcome. You're watching News9. I am Suyash Maheshwari and this is First Tick, where we break down the morning action on the D Street and the top stocks in the spotlight today. Now, Indian markets opened in the red with the first tick for Nifty coming in at 19,027 mark. Now, the sluggishness is on the back of a negative handover from global equities. Now, US markets tumbled in a broad-based sell-off on Wednesday as Alphabet shares slid after the Google parent posted disappointing earnings. Also hurting the market was a fresh spike in US Treasury yields, which has revived fears that interest rates could stay higher for longer. Benchmark S&P 500 index fell 1.43%, notching its fifth daily decline in 6 sessions to close below the closely watched 4,200 levels. Nasdaq, on the other hand, was down 2.43%, its biggest single session percentage drop since February 21. Dow Jones also ended modestly lower, down 0.32%. Now, the mutedness in US is also weighing on Asian shares as most of them are trading firmly lower this Thursday morning. Now, coming back to home, Indian markets have slipped below the 19,000 levels. As if we can see, Indian markets Nifty is down about 0.81% and is currently below. At 9:30 a.m., it was below the 19,000 mark, trading at 18,967 levels. Sensex, on the other hand, was down 0.78% at 63,571 mark. Now, these are the numbers from 9:30 a.m. this morning. The markets have slipped further from those levels. Nifty Midcap 100 was down about 1.5% at 9:30 a.m., trading at 37,982 mark, just below the 38,000 levels, and Nifty Smallcap 100 was down almost 2% and trading at around 12,196 mark. India VIX also saw a sharp spike. India VIX was up 8.3% at 12.25 levels. And with that, let me welcome our first guest on the show, Mr. Akshay Bhagwat, Senior Vice President at JM Financials. Also joining me in the studio is my colleague Amit Ranjan. Akshay, I'll come to you first. Now, just a month earlier, Akshay, hi Akshay, how are you?
Yeah.
Glad to have you on the show.
Yeah, good morning.
Good morning. Now, Akshay, just a month earlier, Nifty was, the overall market was very euphoric. Nifty was scaling new highs on a daily basis pretty much. Broader markets were buoyant. Many of the stocks were, scaling 52 weeks high. But in the last 1 month, and as of yesterday, Nifty has dropped about 1,100 points. From its peak of about 20,222 mark. Now, the midcap 100 index is also down about 3,000 points from its peak, and the small cap 100 index has corrected about 700 points. Now, I just want to understand what's your overall assessment of the market sentiment from a technical standpoint, and should we brace for a deeper correction from here on?
Yeah, so on the technical front, there was a major development yesterday. The support area of 19,250, which was the low point of the prior 3 months, that was broken. So that was one of the most important technical development, because if you look at the charts in the past 3 months, time and again, there was demand at the area of 19,230 to 19,250. So clearly a technical support has been breached. This has been backed by short additions in the derivative segment. And also, if you look at the FII positioning on a broader scale, there has been large unwinding of long bets in the future segment, and also in the cash segment, there has been a continuous sell pressure. Besides this, even if you look at the India VIX, which you rightly pointed out at the beginning remark of your show, that has significantly picked up over 12%, which is a clear indicator that the fear is getting back into the system. So in wake of the geopolitical tensions also between between Israel and Hamas, the rising crude oil prices, the bond oil, the bond spikes, these are all returning back. The fear is getting back. So from a technical perspective, assessing all the different scenarios, if I were to look at the Nifty, 18,900 is an important level which I would give relevance to, considering the fact that 4 5 months back, there was a strong breakout at the point of around 18,850 to 18,900. So I will give importance to these levels as the data stands right now. Technically, yes, we are highly oversold. So the chances of a mild relief rally from around 18,850 to 18,900 cannot be ruled out. We start with a new series tomorrow. So look out for these levels on the lower end. Broadly, if you were to look at the broader way the markets would behave, I would have special relevance, as I mentioned, to 18,850, 18,900. In case the market sustains below this in the month of November, then I need to review the charts and see if there is some serious panic in the market. As it stands right now, it's a minor correction in the entire wake of scheme of things, and you can expect some relief rally once the levels of 18,850 to 18,900 are tested.
Now, Akshay, as you mentioned, today is the weekly and the monthly option expiry for Nifty. What are the support and resistance levels that you will be tracking through the day?
See, 19,000 was a very important level. A lot of positioning was seen till yesterday at the 19,000 strike by the put writers. Now, unfortunately, the gap down opening in today's morning has rather been a surprise to the market participants. We have seen significant shedding in the put writing at 19,000 strike and shifting of the writing bets to lower strikes at 18,800 as it currently reads now for today's expiry. So things are not looking bright. Call writers are also shifting their writing bets to 19,000. There is a panic situation for the option put writers who have been aggressive writers at the 19,000 strike. So there is a tendency that the markets might slip in the first half of trade. Lower end, you might have 18,800 to 850 that also can be tested. So looking at a weak expiry today, mostly below 19,000 in the price volatility, expect 18,800 to 850 to be tested during the course of the day.
All right. Now, the banking pack, Akshay, I mean, between Nifty and Bank Nifty, we have seen a big drag coming from Bank Nifty on the overall market. And I was actually looking at the numbers. In the last 1 month, in the decline of about 1,100 points, HDFC Bank and ICICI Bank alone have contributed to 30% of that entire fall. Now, do you expect the weakness to continue in the banking pack? And what are the levels that we will be tracking through the day?
See, banking actually has given a clear breakdown, a bearish double top pattern, which we look on technical charts. That development took place couple of trading sessions back. So that gives you one is a reversal sign in the Bank Nifty index. Second, it gives you a target roughly of around 41 to 41,500. So I'm more bearish on the bank index than on the Nifty index as it stands right now. As you rightly mentioned, ICICI Bank and HDFC Bank were the saviors for the bank index a couple of trading sessions back. But as you see it right now, even in yesterday's trade, both of these stocks have cracked significantly. Overall, the broader setup for HDFC Bank is weak. Even for ICICI Bank, as it stands right now, it has got below its major support zone. So overall, the way I read the bank index, it is in a weak trajectory. Yes, you might have some pullbacks here and there, considering the fact that we have almost lost around 1,500 points in a matter of 2 to 3 trading sessions. So pullbacks should be exited or sold into if you are a short seller looking for much significant downsides as we head into the November series for the bank index.
Now, Akshay, I mean, the numbers coming in from the banking pack have been rather good, compared to other sectors like your FMCG and IT. But what's weighing on the banking pack right now?
The way I see the result season, most of the result numbers starting from the IT sector, all the results have been good, but unfortunately, the way the markets are reacting, they are not showing much buying interest in the post results too. So I believe most of the result positive news are already had been factored in the prices. Even ICICI Bank, if you would see, as a matter of fact, had stupendous numbers, and unfortunately, if you see how it is reacting today, after such good numbers at 910 from 940.50 from the day the result numbers were reported, it's clearly a sign that market is showing no respect or no concern for the good numbers on the street. So the broader market sell-off is pretty intact. The mid-cap index has given a breakdown. The PSU banks have seen long liquidation. So clearly there is more slight panic or fear in the market as I see it. And in such a situation, there will be less weightage being given to numbers. Traders will foresee this as an opportunity to exit rather than to accumulate.
Hi Akshay, before we let you go, could you give us your top 5 picks for the day?
Yeah. Look, I have a balance of both buy and sell, considering the fact that we are highly oversold. So these are all technical short-term picks which I would recommend. The first one is short in SBI Life, which is SBI Life Insurance. You can short it at around 1311, 1318. Today, obviously, we have a gap down scenario. So most of the levels I would give, so you need to just consider it plus minus 0.5%. Keep a target of around 1272 to 1260 on the downside in SBI Life. Keep a stop loss of 1341. The second trade I would recommend is on Bajaj Auto, a very strong technical setup, strong reaction post its results last week. So it gives you another buy opportunity. So a possible buy candidate if you're searching in this weak market conditions, Bajaj Auto is the name. Buy at the current rate, target 5436 to 5467 with a stop of 5257. Another buy candidate I have is Reliance. The numbers are due I think tomorrow. A possible short covering candidate ahead of the results. Reliance would be a buy at current rate with a target of 2292 to 2310 with a stop loss of 2212. And MCX also is one more stock which has held strongly in the last few trading sessions. Although you might see it down today, but I believe in case of a recovery, this stock would react to positively. Buy at current rates with a target of 2320. 2347 can be the extended target with a stop loss of 2125. And lastly, Godrej Properties has a weak technical setup, short seen in the future segment. Sell Godrej Properties around 1600, target 1520. At 1492 can be your extended targets on the sell side. Keep a stop loss of 1652.
All right, that's the view coming in from Akshay. SBI Life, Godrej Properties on the sell side, whereas you can initiate buy positions in Bajaj, Auto, Reliance and MCX. Thank you, Akshay. Thank you for joining us this morning.